Welcome. Today we're talking about one of the most confusing and contentious issues in free market economics, the question of fractional reserve banking. And more broadly, I want to use this as an illustration of how we can confront questions where we don't necessarily have specific specialized knowledge. In our lives, we always have to deal with areas, whether it's something like public health and we don't have a medical background, or climate and energy where we don't have a scientific background. We have to be able to judge, assess different arguments, look at their methodology, and come to conclusions of our own. And so the way we're going to approach the question of fractional reserve banking is, first of all, by trying to get clear on our definitions, what it is, what it isn't. We're going to look at some of the arguments from free market thinkers for and against this particular practice. And of course, another very useful technique when you're trying to get grips on a difficult subject is to talk to somebody who's a much greater expert than you yourself are. And that's why today I'm joined by my friend Alejandro. How are you doing, Alejandro?
Fine, thank you, Nicolas. Great to be here.
Good to see you. So let's begin with the basics. Can you tell us, using very clear, simple language, simple enough that even a musician can understand it, what exactly is fractional reserve banking and how does it work?
So I would say that there are two senses of the word when one says that there is a fractional reserve banking. And one is a more descriptive way of saying in which banking sector works. And the other one is more normative, trying to describe how a banking sector should work. Now, let me explain the first one, which I think it's very simple. And basically, according to Investopedia, which I think gives a good definition about this, is a system in which only a fraction of bank deposits are required to be available for withdrawal. So let's say that you, Nicolas, go to the bank and deposit $100, and then the bank grabs those $100 and it commits itself to keep a certain fraction of this in its vaults. That means that, let's say that the fractional reserve is at 10%, or that the fraction that the bank reserves is 10%, then out of the $100 that you gave them, the bank commits itself to keep 10% in its vaults. Now, the more normative sense of the word is when regulations establish that there should be a certain coefficient or a certain proportion of this in the sector or in the banks, because they want the banks to have certain liquid assets, so that whenever you go to the bank, then the bank doesn't say, "Oh my God, I miss all these deposits. All of them are deposited at the at loans or other assets." So certain regulations require banks to have at least certain amount of the deposits in the vault. Now, you will tell the most common of this is basically a reserve requirement, which is basically means that you will keep a certain proportion either in your vault or deposited at the central bank. Although it has been swiftly changing, this has been swiftly changing over the last years, where basically instead of requiring banks to keep a certain proportion of their deposits by law, they basically are being enticed or being paid to keep a certain amount of their money in either the central bank or their vaults.
And am I correct? I read somewhere that since I think it was March of 2020, the Federal Reserve reduced the reserve requirement to zero. And that's where you mentioned they offer enticements, they offer a certain interest to banks that keep some a certain reserve. So now when the Federal Reserve was first created in 1913, I think the reserve requirement, it was somewhere in the 8 to 13% range, depending on the size of the bank and things like that. So the requirement in the United States now is zero, technically. Is that correct?
Yes, that's my understanding. And even though they have been changing this for a while, it's common that it's very close to zero over the last decades.
And so one major source of confusion for me, is it theoretically possible for a bank to lend out more than 100% of what it has on deposit?
Oh, definitely. And actually, that's I think you wanted to talk a bit more about criticisms, but sometimes fractional reserve banking is confused with the way in which a bank operates. And I think that's a really bad way of conceiving how a banking operates. It's not true that whenever you deposit $100 in the bank, then the bank is able to lend some of these deposits out to some other people as loans. Actually, what is true is that a bank can issue debt, and some of this debt usually are deposits. So the bank doesn't need someone to go to make a deposit and therefore make a loan. A bank can actually say, okay, Nicolas, I want you to lend you $1 million. And now you have an account with me that is for $1 million. It doesn't need someone to come and deposit $1 million for you. One of the benefits of having deposits is that they're stable. You can manage them. You don't have sudden withdrawals, sudden issues. They're relatively cheap, and therefore many banks have most of their liabilities set up as deposits. And but it shouldn't be confused that a bank has to have deposits to lend out money.
So since fractional reserve banking seems to be the default, it's used by all the banks around the world. Let's begin first of all with the arguments in favor of the practice. And indeed, there have been a lot of free market thinkers in favor of so-called free banking. People like George Selgin, Larry White. I've also seen some talks by Yaron Brook where he basically says, yes, fractional reserve banking, there's some risk, there's some instability, but basically the benefits outweigh the cost. So can you talk a little bit and try as much as possible to steelman the free market arguments in favor of fractional reserve banking?
Well, I would say that the most salient or the most used argument in favor of that is that one needs credit to create a supply of money that is not difficult to realize itself. And with that, I mean that if you would, for instance, use gold or use Federal Reserve notes or that little paper that you hold all the time, it would be extremely costly, extremely difficult to make any transaction. Like imagine yourself trying to buy something from Amazon. It would be extremely difficult, even if you would make the transactions digitally and that some banks exchange to each other some notes at the end of the day. It would be real difficult to make it, and it would be real expensive. If you would set yourself in that kind of world, you would be arguably, I mean, the world of 100% of fractional reserve banking, that is a world where there is no fractional reserve banking, then it would be extremely expensive to operate in it. Like imagine yourself trying to make any single transaction using just gold or any other set of money. And therefore, you can use credit, solvent credit, really useful credit from banks via IOUs or other types of liabilities that they issue. And then you can settle your payments or any debt that you have with it. You won't need any reliance on any hard currency to do it. So I would say that's basically the main argument for the not having a fully fractional reserve banking.
And the other argument that I've heard from the argument that Selgin makes, he actually lays it out and says, if you had like a real free banking system where some banks had 100% reserve and some banks had fractional reserve, he thinks that most people would rationally choose fractional reserve banking. Why? Because rather than having to pay a fee to deposit their money in a bank, they actually get to earn interest. And of course, everybody wants to earn interest on the money that they've deposited. So his idea, and in a moment, I'll talk about Riesman's sort of disagreement with that, but his idea is that most people would rationally accept some of the risks if they have the benefit of getting a little bit of interest on their money. So what do you think of that argument?
Well, I think it's a good argument, although to be honest, I heard the argument set up otherwise, that people that argue for 100% reserve requirements say that the 100% requirements banks would be winning over the the banks that have no requirements, because it's safer and better in their view.
Yes, well, and that's exactly the point that George Reisman makes. So my understanding of his position is he's against the practice of fractional reserve banking. He doesn't think it should be illegal necessarily, but he thinks that in a free market it would die a natural death. And I think there was some discussion of that a couple of weeks ago. You know, the conversation between Jim Brown and Clive Davis that came up. But now, fractional reserve banking has been strongly criticized by a lot of economists in the Austrian school who tend to associate it with the creation of business cycles, the creation of boom bust cycles, and all sorts of corollaries like inflation and economic inequality as a result. Probably, I would say probably the strongest argument seems to be from Rothbard. So Murray Rothbard argued that fractional reserve banking is a fraud, it's a scam, it should be illegal. He represents a very, very strong position. One thing that I find interesting is that from some of the readings that I've done, people on both sides, both the pro and contra side, cite Mises as an authority. So I get the impression that Mises he had mixed feelings about the practice of fractional reserve banking, or he seemed to provide some arguments both ways. But can we talk a little bit now about some of the criticisms, some of the really strong criticisms, not just on practical grounds, but even on moral grounds, like Rothbard's criticism, saying that it's a fraud and a swindle, etc.
Well, I would say that there are basically four economic arguments and four legal arguments. And I'm not a legal expert, so I think if someone wants to hear the legal arguments in favor of 100% requirements, then he should super chat, and I will tell them. But I will tell you a bit more about the economic ones, because those are the ones that I know better. And as you mentioned, practically one of the major criticisms against the fractional reserve requirements is that they say that encourages banks to lend more than they are able to, and that in turn creates further increases and lacks of balance in the way in which people deposit, and at the same time in the way in which banks lend, and therefore there's a mismatch, and that creates a boom bust cycle, which is one of the most studied parts of the Austrian theory. Now, there are other criticisms, which one of them I've already mentioned you, the one of Reisman, which is if there's 100%, people would choose it over the non 100%. There's also the idea that the fractional reserve is inflationary, and therefore because it increases monetary supply, and therefore it creates more money than it should be in the economy. And the last reason that they give is that the fractional reserve banking doesn't add up to anything, because transactions would already be done even if all money were done in a non-fractional reserve banking sector. Now, you mentioned the moral argument, and I think that without talking about the legal issues, I would say that in essence, people like Rothbard see something wrong in the whole idea of promising something while you don't have it at the same time. Like if I promise you, Nicolas, that I will pay you $100, but I don't stipulate the time, they say, "Oh, that's fraud. Oh, that's a scam." And I think that a lot of the arguments of Rothbard are going to that to that point.
Now, before we get to your own point of view, one argument that I've come across in a lot of the free banking literature, like Selgin, for example, is they say, well, look, in the 19th century, in Canada and Scotland, before they had central banks, before they had the Bank of Canada or whatever, before they had central banks monkeying around with interest rates and with the supply of money, they did have a kind of fractional reserve system, which for the most part worked really well. There were minimal disruptions, minimum booms and busts, and there weren't any bank runs or anything like that. So in empirical terms, it seemed to work then in the 19th century. And what I like about that argument is it actually points to a historical reality. And so the conclusions that Selgin and others draw from this is, if we didn't have the central banks, if we didn't have, say, the Federal Reserve tinkering around with interest rates and with the supply of money, then fractional reserve banking would work fine. And the phrase that Selgin uses that I quite like is, we should keep the fractional reserve baby, but throw out the central bank bathwater, which I kind of like. So do you think there's any validity or legitimacy to that argument?
The argument that in the past it worked, and therefore
in the past it worked, and that what's making it not work is the presence of the central banks specifically.
Oh, definitely. And I would say that the breaking of the gold standard over the last 100 years is also a big explanatory factor. And certainly, I mean, you told me that you want to hear my opinion later, but just as a prelude, I would say that the main factor, the main thing that has been, there are real problems in the monetary system. And sometimes you could see that ways in which the fractions are measured would suggest that is the cause of the problem. But I would say that there are other problems that underlie that the fractional reserve banking looks so fractioned. There are the underlying cause of the problem, and therefore those are the fundamental problems which should be addressed firstly, if one wants to have a sounder banking system or a monetary system than the current one. And actually, the fact that in the past fractional reserve systems have worked without major problems, specifically because they had gold as a redeemability factor, or something that could be working as a way to buy your way out of the system, are not present anymore. So that makes the system in itself riskier, rather than the whole feature of fractional reserves.
One of the things about this topic that I find that's most bewildering to a layperson like myself is you have some of the greatest economic minds of the past century at loggerheads over this issue. I mean, they seem to be unable to come to agreements on some of the basic principles, basic ideas. But now I'd like to ask, so what's your perspective on all of this? Which of the arguments do you personally find most persuasive, and why?
Well, I would say that as such, I'm not persuaded at all for people that argue in favor of 100% requirements or any kind of specific requirements. I think it's really bizarre that the same people on the Austrian side that ask for and know that certain requirements or mandates in law create certain discomfort in the economy or sometimes crisis, they ask for a certain number of certain types of assets in the economy. And I think the basic problem of that is that they don't recognize the real, first of all, value of credit, and also its nature. Credit is, by its name, it's something that it's fulfilled because you are able to accomplish a certain demand when you compromise yourself to do it. Like, I give you credit for this or that because you did it. Credit derives its name from that. And I think that a lot of the people who argue for full reserve requirements actually are people who don't really understand the nature of credit and see it in really skeptical eyes, skeptical to the extent that they're willing to even consider that from a free market perspective. I do think, however, that there is a problem, and as I said, there's a real problem with the system, and there are big issues in the monetary from the monetary side, and the most common problem is that, for instance, banks get deposits that are at a really low maturity. Let's say that you deposit, you make a deposit for $100 at 1 month, and with those $100, the bank makes a loan for a mortgage of 30 years. you are having something that some will probably be called at a month, and something that you have for 30 years, that's something really bizarre. But what's explaining that? Well, what's explaining that is that basically the system is really unprofitable. That is that basically anytime that you ask for money, it doesn't add up to anything. And every time that you try to invest something, it's really difficult for you to get something in return. And also another part of that is that central banks encourage a lot of lending and a lot of behavior that wouldn't be happening if they wouldn't exist, basically because banks are ensured that they will have liquidity if they will need it. If banks actually knew that they won't be receiving any liquidity assistance, they would actually be way much careful with the way in which they manage their money.
So it kind of in summary, or to expand on some of the points you made, if you were to advise somebody how to fix the monetary system, you wouldn't start with fractional reserve banking. You would start with, say, central banks, try to get them out of the way, try to stop them from manipulating the money supply and the interest rate. What would be your sort of plan or your starting point for fixing the monetary system, if that were possible?
I think that goes a bit beyond my field of expertise, and I would be very cautious with anything that I say after this, but I would say that essentially we need that any credit is payable in hard currency, in my view, dollars, and that would anchor a lot of the credit that exists in the system, and it would give us a way out if someone doesn't agree with the system. The fractional reserve banking, I would leave it like that. If someone wants to set up a bank with 100% requirements, be free about that. If you want to compete in the free market for that, all yours. But I think at the same time, it would be legal and perfectly proper for a bank to exist with fractional reserves.
And so you mentioned a couple of times in the discussion the gold standard. So correct me if I'm wrong. The United States has been off the gold standard since, is it 1971?
That I would say that that's even beyond. Like in 1913, you would say that there was the first break of the gold standard. In 1971, there was the last semi-link that there existed, but I wouldn't call that the gold standard.
Yeah. What do you think of returning to the gold standard? What's your opinion? Do you think that would be a good thing, a positive thing?
It would be amazing. I think one of the things that we're observing right now, and that is maybe very difficult to observe, is that because of a lot of regulation, a lot of problems in the economy, we are observing that basically banks aren't allowed to lend at really profitable margins. And what that entails is, or what that implies, is that we don't have we don't have any kind of livelihood within the economy. We're in a dying age of the economy. And if we had a gold standard, there would be a big incentive for banks and for people in the economy to revamp the system and try to persuade people to get less regulation and to really face the costs that they're facing. Because now with easy ways of lending, it's very easy to get easy money and as well continue the path as it is.
Well, I have one more question that I want to ask, but before we get to that, let's just check in with Daniel. Do we have any comments or super chats from our viewers at this point?
We have a super sticker from Jonathan, thank you so much, and a super chat from James, thank you. He says, if all of the reserve parameters and conditions are fully disclosed, it should be a legal contract. Alejandro is great.
I agree. And that's pretty much the point that Yaron Brook makes in the clip that I saw from the Ayn Rand Institute YouTube channel. So final question. This is a very confusing topic. For those of us who want to get a better handle on it, read resources from different sides to get an understanding of both sides of the issue, what are some resources that you recommend? Books, articles, particular authors that give different perspectives on fractional reserve banking?
Well, my favorite economist, especially in this realm, is a Spanish economist called Juan Ramón Rayo. Although I think that his books are not yet translated into English. He has a critique to the monetary theory of Mises. And I think he does great work explaining how Mises thinks in a real objective way. And at the same time, he provides a lot of his criticism against some of the way he conceives the monetary system. I would say that would be the first way to go, and that would be a nice starting point if you want to learn about that. And other sources would be Keith Weiner's. He has a couple of essays on fractional reserve banking, and those are as well pretty good. I think they're published in his blog.
Okay, excellent. And do you any other final thoughts on this, or where we can learn more about some of the work that you're doing? Because you have your own YouTube channel, you do your own do you do some of your own discussions and podcasts if people want to find out more about your ideas?
Not at the moment, but
or are you publishing any articles?
Not at the moment as well. I tried to do this as well for a while, but so far I'm fully engaged with TDO.
Okay, excellent. Well, we look forward to seeing more discussions with you. Thank you very much for answering my questions on this subject.
Thanks.
Let's just check in one last time with Daniel. Do we have any final super chats or announcements for upcoming shows today?
No more super chats, but in about 4 minutes, we have the reality show on the legacy of the UK Conservative Party. Link for that is in the chat. At 7 p.m. UK time, we have the Fountainhead Book Club for ARC UK members. The session will also be live streamed to YouTube members, and also a special announcement. The Briefly Objective is coming back with a new video, Why Altruism is Evil, and that's going to be at Thursday at 7 p.m. UK time. I'll put a link for that also in the chat.
Okay, excellent. Thank you very much, Daniel. Thank you very much, Alejandro, for sharing your economic expertise with me. I look forward to chatting with you again soon. Thanks to all our viewers and supporters. And until next time, I wish you all the best of premises.